So in this week's crypto recap, we've got a exciting testimonial from Mark Zuckerberg, who took a lot of fire from Congress over the Libra coin, and then a story of the government making a bold attempt back in 2017 to try and kill Bitcoin. I don't know. We are, of course, joined by Dave Zeiler to explain what happened with both of these. Dave, let's start with the more recent stuff. What went down in Zuckerberg's congressional testimonial this week?
Well, they called him to testify at a hearing in the House, and this was supposedly to be about the Libra cryptocurrency project that they've been trying to put together, and has been getting a lot of pushback ever since they announced it like 6 months ago. But what it really happened is once he got in there, most of the legislators, especially the Democratic legislators, spent their time kind of lecturing him, not just about things they didn't like about the Libra cryptocurrency, but about things they didn't like about Facebook and him personally. And it was a lot of political grandstanding, which is not, unusual in Washington. A lot of these things turn out to be political grandstanding. So not a lot of information. They weren't asking questions about how's Libra going to work. It's like, what's going to happen? And the sort of things you would expect in a hearing like this would be to get information out of the guy. You've got Mark Zuckerberg there. He's the CEO. He knows all about this. This is your opportunity to find out more about it. They kind of wasted that so they could just get their own points across. Zuckerberg, for his part, probably didn't do himself any favors. First of all, he looks, very wooden. He's not the best salesman in the world. He's no Steve Jobs. But then he came out really early in his opening statement and said that if we don't do it, if Facebook is not allowed to do this and create this sort of global cryptocurrency, then the Chinese are going to win the race, and you don't want that. That sort of almost veiled threat in a hostile environment that he was in probably wasn't the best strategy, but he is kind of right about that.
So the Democrats were not very enthusiastic about it. What was the Republican take on this?
The Republicans were a lot more sympathetic to the idea of a Libra cryptocurrency, or even the idea of a global cryptocurrency. And they seem to understand that something like that is necessary. They spoke a lot about not stifling innovation, which is a good thing. One thing that is unfortunate about this is that you're already seeing this become a partisan issue, which is the last thing we want here. You don't want it to become a Republican-Democrat thing, because then all reason goes out the window, and as we've seen with many, many other issues, and it would be unfortunate if that happened to cryptocurrency.
So going back a few years, the CFTC just came out with an interview saying that they intentionally popped the 2017 Bitcoin bubble. What are they talking about?
Well, this was the guy who has been the CFTC chairman, Christopher Giancarlo, his name is, and his term just ended this past April. So he was in office during the time period we're talking about. He was giving a talk at a conference about a week ago, and he just mentioned during this talk, he's like, well, people don't know about this, but, we, meaning the CFTC and the Trump administration, the other agencies involved, like the SEC, and it was the Department of the Treasury, they said, we're the ones who popped the bubble. And it is true that at the time, the CFTC is the agency that did approve the launch of Bitcoin futures. That's when Bitcoin futures first launched. And sure enough, it was in the middle of December of 2017, which was when Bitcoin hit the peak. It was almost $20,000 per Bitcoin. And almost to the day after those things started trading, it started to go down. That's when Bitcoin started to go down. The bubble burst. And then, of course, it lost 80% of its value. They're saying, yeah, that was us. And they basically said they were looking at it. All these agencies were watching it, getting very concerned because they were remembering back to the 2008 financial crisis, when we had a lot of different bubbles, like the real estate bubble, and when they burst, it created, catastrophe for the entire financial system. The central banks control monetary policy, and they do things like negative interest rates, which cost you money if you're a saver. And also you have inflation, which they like. They like to have at least 2% inflation, which erodes your savings. You have X amount of dollars, but they're worth less every year because of inflation. Cryptocurrency, and Bitcoin in particular, solves that. It's deflationary. If you take your money out of dollars and put it into Bitcoin, they can't do anything about that, and it destroys their ability to make their policies. Now, what I find interesting about this is that Bitcoin back then was not nearly big enough to have any sort of impact on the rest of the financial system or any of the markets for that matter. And of course, we saw the bubble burst. It lost 80% of its value. None of the other markets were affected in any way whatsoever. So to say that was their reason, I don't think that's the real reason. I think they were looking at it, and these government officials saw something that they could not control getting bigger and bigger and more powerful. And they're like, you know what? We don't like this. We're going to stop it right now before it gets any bigger. We're going to put an end to it. We're going to pop this bubble, and then it will be over. What they didn't realize was that Bitcoin is much harder to kill than that. And we've seen in the past, Bitcoin had already had bubbles that burst in its history. This was like the third or fourth one, depending on which ones you count. And Bitcoin is not going anywhere. And since then, it bottomed out about $3,000. Now, today it's over $8,000. It's going to continue, and it's probably going to go a lot higher.
Well, that's certainly seems like a pretty likely explanation of how that went down. We'll kind of keep track of it and see if any more news comes out of it. Thanks for joining us for this week, Dave. And you can click on the links below in the description to read more of Dave's work at moneymorning.com. And we'll see you next week.
I'll be here.
Perfect.